So you've been brought into the company. It's been in trouble. It's been a very difficult period. You've also been disposing of assets. It's going for a rights issue. What's your role going to be in driving this business going forward?
Look, we've looked at quite a lot of issues, what went wrong in the business. And one of the issues we identified is that we're trying to be everything to everybody. And we want to go back to the core of the organization, what is with steel and steel-related products. So what we've embarked on is a process to get the business back to its core, dispose of all the non-assets that we don't want, get rid of all the products that we don't want, and then concentrate on steel and become steel specialists. When you look at this back to this business in the years when it was very successful, it was only trading in steel and steel products. And because of the bulk buying in steel, they could have been able to get good prices. A few years ago, they decided to go into hardware and DIY and putting that products on the line. And that created a situation that the margins were under pressure. They were competing with the big builder warehouses, couldn't match the prices, and it created huge pressure on the business. We've restructured it completely, going back to core. We're going back to our product lines, looking at that strongly. We've restructured the balance sheet quite substantially, and we're looking forward to grow the business.
Tell us where the problems really started, because as we know, most materials businesses have had a tough time over the past couple of years. We're coming out of the recession now, and you're obviously trying to prepare yourself for the upturn in the economy. Was it really just because of the recession that the business went into trouble? Look,
I think normally when businesses goes into trouble and you're not quickly to adapt, you stay behind. And the business wasn't quick enough in adapting to the new circumstances of the economy. And therefore, it took too long to get rid of the non-core assets, too long to get rid of the extra people, retrenchments, and the losses continued for too long period. So what we're trying to do now is, I've been involved since the 1st of January with the business, with the restructuring, and we spend a lot of time on our markets, our market perceptions, where do we want to play, our service levels, our quality of our products, and we really want to grow the business back to where we were before. The business, by trying to compete with your big DIY and builder warehouse businesses in that industry, you need to have the buying power. We never had, and we couldn't meet the prices, so we would not be able to compete on that level. And the products in what we were good in the past, we also lost our way with that, and we're not supplying the clients to that products. So very, very important is to get back to the core, which we have done already about 80 to 90%. Look at our debt structures, look at our debt credit, because a lot of credit was supplied to people. You will see there's a big write down again of debtors of about 17.5 million in the financials, and last year it was 35. So we also need to look at how we supply credit to what industry. The problem with the steel industry is in a tough time. So you're trying to fix a business in the industry that's still under pressure. But we believe we have lost a lot of market share. And if we can claw back the market share we've lost, that will give us enough growth for next year to get the business back on track.
Johan, this won't be the first business you've turned around. You've been involved in turning around businesses before. What's the particular challenges you face here? Because I see you have very high debt levels. You have negative cash flow, quite heavy negative cash flow at this stage. I mean, it really looks like a tough challenge ahead of you for you.
But luckily, I've been involved with private equity businesses before, in private equity structures. So normally in private equity structures, you always have high debt, and you need to have enough cash flow to service the debt. So one of our areas is to see what we can do to get the debt levels down. The structure we put in with Nedbank is a very good structure. We've been able to structure the debt in such a way that we are able to service the debt and going forward. But the challenge is to get people's mindsets changed from the business going under, closing down, not sustainable for the long term, to the future, which I want to put pressure on them to grow. And it's more to manage the people to grow the business going forward and get them to see the vision of where we want to go to. That is a big challenge for us, because they've been for the last 6 months heard they're going to close down, or they're not going to make it, or the business is not going to survive. And now I come in and say we need to grow, and we need to grow aggressively, because it's the only way we can make this business work. So that's one of the areas. We also improved the management quite a lot. We're bringing new directors on the board. We also bring new management team levels on board, because we need this business to understand and to grow quite a lot going forward.
You're also going for a rights issue. You plan to raise 40 to 50 million rand. You have the support of some of the shareholders in that. What's that money going to be used for? Is that going to be paying down debt as well?
No, luckily for this rights issue, is at all not paying down debt. It's purely used for the company to grow. So what we're doing is we've got a commitment of about 40 million of the rights issue at this stage as we sit. So we're quite comfortable that we will be able to source the rights issue as we anticipated. But the money is going into the company to grow, to put our stock levels back, to get our creditors. In this business, in steel industry, is very dependent on your discounts. And if you don't pay your creditors on time, you don't get the discounts, which puts you aggressively in the market on margins. We want to get that back to normality, and then get the margins back into the business, and then grow the business from there.